going on? And it's got the cursor flying around, which I got rid of. Twitch, for some reason, doesn't want to do it. Close that out, because that's just a distraction. That's also just a distraction. All right, good evening. Welcome to the equities and futures market review. This is going to be pretty much the same time. This will basically be the same thing as last time, except it's going to be a little bit more streamlined. I got my ideas together a little bit better, and there's going to be some redundancies, which I'm going to be able to tap a little bit more lightly. So without further ado, let's take a look. So as we can see, we have the treasuries going down, macro scale. U.S. dollar index trying to go down, like it should, right? So treasuries down, U.S. dollar down on the macro scale, right? Short, intermediate, long term, they're going to be inverted, but big picture, they move the same. So looks like we're starting to see that turn in the dollar index, which we were on the lookout for. We'll see how it develops, especially with the world, holding its breath, and we have all these holidays coming up, and yeah, we'll see how it works. So looks like Dixie is taking a turn downward. So let's take the Thomson Reuters. So last time we saw treasuries going down, the commodities should be going up. So obviously they haven't turned up yet. They should in the very near future. Eventually the market is going to have to correct. It's going to have to figure out what it's going to do, and the commodities are basically just going to go up. So right now, I'm not entirely convinced that this price is real. It may have to come down. It may have to correct by dropping, just because we're very, very heavily manipulated right now in the commodities. If we look at the Goldman Sachs idea, this is more what I am. This is more of what I would expect to see from the commodities, just kind of pulling down a little bit, and then I guess they're kind of waiting. So treasuries down, commodities are going to be turning up, hopefully. As we look at the S&P, these should be dropping down with the T-notes. Obviously, they're not dropping down with the T-notes, so that's suggestive of manipulation. But also keep in mind that there are very significant lag times on these very high time frames. In the dollar index, we saw some lag times of like a year and a quarter. That is fairly extreme. So yeah, we might see lag times like that in the S&P as well. If we look at the Nasdaq, here we go. We see more of the same thing. Notice they're not poking out the highs. They're not running the highs. They're gunning for them. They're aiming for them. They seem like they really, really want them, but they're not really spreading their wings and taking out those highs. So I do sincerely believe that these highs are safe. That's my sincere belief. So yeah, that's my prognostication, is that these highs will be safe, just based on this long-term basis alone. So let's look at the Dow. So the Dow, like I said in the last time, is more indicative of what's going on the ground. It has a lot of companies that are very industrial in nature. They're not so many. They're not so much tech companies, but they're very industrial in nature, and eyes. There are not so many eyes on companies in the Dow. So what typically ends up happening is this this index is going to show us a little bit more the actual state of the market. So we can see that they're chugging along, they're trying. Even the Dow is gunning for the highs, but it's struggling. It's struggling a lot more than the S&P and a lot more than the Nasdaq. So I do expect that to see that kind of turnaround. And for the Dow, I think this high might be safe. Um, it doesn't have to be. It really doesn't. So let's take a look at the Russell. Now, the Russell, I usually use this one for trying to take a true read of the equities. So why would I use the Russell for that when we have the Dow, the S&P, and the Nasdaq? It's because the Dow, the S&P, and the Nasdaq, they contain very few companies, and they contain a lot. Well, they're heavily weighted in companies that see significant interest for. They are heavily weighted in companies that see significant interest for economic activity. So typically, what's going to happen is that you're going to see manipulation in there. In the Russell, we have 2,000 companies. And it's large cap, it's small cap, it's all kind of well, this particular one is small cap. Not too many eyes on these companies. Usually some very industrial companies like I don't know, oil miners and things like miners and materials producers types of things. So we're gonna see the true health of the market more or less in this one in the Russell. So Treasuries down, equities down. That's what we see in the Russell, right? Make sense? That's sensible? Is that cool? All right. All righty, righty, right. So then we're gonna leave the monthly chart alone. When we start analyzing the charts for targeting, we're gonna come to the monthly chart. But until then, we're actually gonna leave that alone. We're more interested in the daily chart and seeing our seasonal influences. Okay. Oh, our weekly chart. No, I have to lay the groundwork that we have seasonal influences first. So let's do the daily chart. Okay. So we do the S&P, and we check out our S&P. So seasonal tendencies. Let's see, which day is this? 17th, and next trading day is the 20th, right? It's going to be more or less right in here. All right, so we may see a low in the marketplace. Now, I was not expecting to see this particular low, but I was expecting to see the market kind of fall out of bed if we had a slow marketplace. Now, what constitutes a slow marketplace, and why was I really trying to not see one? Well, a slow marketplace, that's basically where we see right here where the market just kind of hangs out and does a whole lot of nothing, right? It does a lot of rebalancing. It's kind of moving to where it wants to go, but it's doing a lot of rebalancing. It's doing a lot of retracing. It's not really performing exactly how it's supposed to be performing. So, why was I looking for a fast marketplace in this case? It's mostly because of crypto and well, basically crypto. So crypto and gold, and to an extent oil, were supposed to carry this market. And along with those, we were supposed to see a lot of explosive upside. We were supposed to see a lot of explosive upside with the equities, and it was supposed to take out some objectives that were up here. I did not see the S&P not going up here, so really it needed to spread its wings. It needed to do a whole lot if it was going to fulfill some upside objectives. That being the case, Um, Basically, it had two cases. It was either going up or it's going down. So since it's not going up, I do expect some very severe retraces, and I expect it to drop like a rock. Now, why would I expect some retraces? Well, let's go ahead and let us take this order block on a weekly. Okay. Better yet, let's take this one. Okay, I know that's green. I know that's not our color for the order block. However, if we look at our open interest, now ideally you want to see the seasonal open interest on this particular measure. However, actually, let's go to our contract month because this is going to make a lot more sense. S&P 500. Take our order block. However, when we look at our open interest and we zoom in, because this is when the contract month happened. So this is when we really unloaded onto this December contract. So we're really interested in price action beyond this. We see how it declined here. It declined through here, and then it started rising as we started rising. Now, what is that really telling me? Why is that really interesting? Because I viewed this as a downtrend, and now the rules for open interest are as the open interest is going down, the trend is trying to end. So seeing this go down with the open interest, that would have, or that should have told me that the trend was ending. There is an alternate way to read open interest. If we consider this as a consolidation, open interest declining, that's like squelching that is like squelching out the supply. So dropping open interest in a consolidation squelches out the shorts, right? And it really creates this pop here that we see on the weekly chart, right? Once we get into an area of interest inside the consolidation, if we see that open interest is rising, that's squelching out the shorts. Well, I'm sorry, no, that is squelching out the longs, right? So this is a chain yank on the longs. In order to confirm this, I need to see seasonal data on open interest. I don't have that readily available on my fingertips, but it's a data point. This is something to keep in mind. That we saw open interest rise as we got into this order block. So let's close that. Let us go back to the daily. Okay. So on the daily, we can see that we can make some highs basically right here. And then we can also make a low basically right here. Let's take a look at let us actually divide this up. Where is this? We can divide this up. If I can find the right one. No emojis. Cycle lines. Perfect. That's fine. That'll do what I want. If we divide this up into quarters, if we're allowed to divide this up into quarters, well, there's 5 weeks in November, right? This is the week we just had. We could have made a low. So right now, this is not telling me very much. The reason that it's not telling me very much is in cryptocurrencies. However, we'll figure that out. We'll get that. See, 1, 2, 3, 4, 5 weeks, right? How many weeks do we have? 1, 2, 3, 4, 5 weeks. So we really do have 5 weeks in November. Let us monthly chart, 1 month. Okay. And we're actually going to break this down based on the cycles. There we go. And that's just to put a placeholder in there. Let's go on the weekly. Okay. Let's go on the cyclical. Yep. Boom. Perfect. Perfect. So now we can see the weeks broken up. 1, 2, 3, 4. It says that there's 4 weeks. That's fine. Excuse me. I need to go to the bathroom really quick. Thank you for your patience. All right, so what was I saying? So if we look at this week, look on the daily, and we look on the daily. 1st of November. Uh-huh. So that's what's going on. That's why I did that, huh? Mhm. So if we look at this week, we actually see some very dicey seasonal. So see that low? See that particular low that's right there? Just looking on the charts, we see that we can actually come down and we can make that particular low. I'm sorry, just looking at the charts, we can see that we can just come down and make that particular low that's on the charts. This one right here. The only problem is, after we saw what we did in crypto and, well, not particularly in gold, but in I was watching platinum palladium too, but it didn't matter. After we saw what we saw in crypto and in oil, I don't know. I don't know if I want to trust this low to hold. This can just drop like a rock and just drop through and just step ladder the highs into the market like this. That's something that could happen. So basically, my prognostication for this is it's like the opposite of last week. So last week I started with a very strong opinion, and I was thinking full send. We were gonna do, man, we are gonna do what we are gonna do. We're gonna be wildly bullish. It was gonna be crazy. And then I saw some things, and I was like, putting the brakes on that. Putting the brakes on that. So this time, if we see this low put into the marketplace, and we see us moving away from this low, I'm gonna be full send bullish. But until then, I would think that we should probably be careful. You know? So that's my ideas on the S&P. That incidentally, that's also my ideas on the rest of the indices. We'll look at them for a second. So what we're doing is we're analyzing the highs and the lows of these markets. So let's reduce this, or let's reduce the period of this probably to like 10 years or 5 years. Is that good? Does that change it? No, no, that doesn't change it. It's gonna have to go down to 5 years. We don't want to go under five for seasonal tendencies, and the reason that we don't want to go under five, um, is because we five is really pushing it, but under five, oh, that's why. Oh, I'm such an idiot. I apologize for that. So for our equities trading and all of our things, working off the seasonal tendencies, we want to use the continuous contract, which I had moved away from. So that's probably why it's doing that. So we check our 15 year. We see the difference. We could go 10 year just to see a little bit of contrast. 10 year. Yeah, that looks good, doesn't it? I would say that looks good. So, with these seasonal tendencies that we would use for our equities trading, right? um, I know I'm saying that word a lot. It's just because my SEO is so bad right now, and I'm so small. I have to say buzzwords. I know that word is very. It's a little bit dangerous because I don't want to be. Um, I'm not a trade advisor, and I'm not supposed to be giving trading advice. This is mostly just kind of throwing out ideas, studying ICT together, and hanging out. I really like the old school ICT stuff. So that's why I'm doing it like this. I'm not really focusing on PDs a lot. It's just the large scale fundamentals that he hasn't talked about since like man, I haven't seen that stuff since his 2016 stuff. Um, but no, he did some in 2018. He also put out a 2020, I think, stuff. Did he put out 2020 stuff? I do believe he did. So yeah, he did probably 2020 stuff. Let me check. Yeah, yeah, no, he did a market maker series and he did a market maker series including a lot of this stuff. So, but basically, we're reviewing um, based on the fundamentals, based on the seasonalities, based on all of these things that make the PDs work, and ultimately the PDs, um, selecting them and working based on them and targeting based on them. It's a targeting thing based on what we are doing here. So if you don't have the top-down stuff, the ICT stuff is not going to work, and you're going to complain, and you're not going to know anything about it. I firmly believe that when people have problems with PDs and ICTs, um, it has nothing to do with not knowing a rejection block, an order block, a fair value gap, a SIBI BISI, a breaker block, a mitigation block, or an equilibrium. Because to be honest, when he shows that stuff on his videos and when people share that stuff around, it's it's not that ambiguous. It's really easy to look down here and see, okay, it has a wick. What is a rejection block ultimately? It's a wick that shows some form of rejection, right? And then what's an order block? It's an up candle, but it's a very specific type of up candle. It's a very important up candle, which you're gonna see in the charts. You're gonna identify it, right? So like, see here, this order block here, this one worked, right? Because what happened was this one came down. It didn't even kiss it, but this acted as a prop block, right? Why did this act as a prop block? Because it came down, it kind of folded over and came up, created this little crinkle, and that was a prop block in this market maker model, right? So, yeah, basically, um, the narrative, which is what we're laying down right now, makes these PDs work. So that's I really do sincerely believe that that's the difficulty, that's the trouble that people have, and it's not the fact that they can't identify the features. It's just that they identify the wrong ones. They see that they don't work, and Yeah, of course they don't work because you don't have narrative behind you. Um, so yeah. Anyway, where was I? Looking at the Dow. Dude, the Dow 30. So we're just looking. We're trying to see. Okay, yeah, there's that same low, right? There's that same low that we can make. Where can we make that low? We can make it inside here. We can make it in the order block. We can come down pretty far. Um, Really, I think that if we are making the low, we're going to come down into this fair value gap. We might kiss the halfway point. We might come down all the way. I really don't know. But I don't think that we're getting back down to the order block. Why? Because we have these objectives all the way up here that are unfulfilled, and the particular move that we're stalking, that we're watching and monitoring to see if it fills out, it's going to be a very fast one. It's basically just projecting up, hanging out, giving a buy, projecting up, hanging out, giving a buy, projecting up, hanging out, giving a buy, maybe, or just running through. That's the kind of move that we're looking for. So when we see this low develop, we expect that retrace to be very deep. If it gets under here, it might not be a retrace. It might just be bearish price action. But I want to have my hands off of the market if it does that. The reason I want to have my hands off the market when it does that is because I don't know if that's a retrace, or I don't know if that's just a stock falling out of bed. This is not a stock. This is an index. I don't know if it's the futures contracts just falling out of bed. So right now, um, if crypto didn't do what it did, I would say that we can just sit here and watch it bang around and just buy it when it comes here. But since crypto is trying to fall out of bed, since Ethereum did fall out of bed, I don't know. I don't know. I think the underlying bullishness that would have created this move and pushed everything through the highs, it might not be there in the market. So that's what I'm monitoring for right now. If we go higher, we go higher. But if we're going lower, I want to watch it. I want to keep my cards very close to my chest, not play them too hard. Um, Keep the game very, very light, very, very conservative, very, very, what's that word? We don't play too hard, right? Right. I don't want to bet a lot. I don't want to bet the whole pot on anything that goes lower from these indices. So yeah, let's check out Nasdaq. Nasdaq was doing a whole lot of the same. It has that low. It has that same low. Come on. But interestingly enough, this one, it likes to print double bottoms. Now, when you see double bottoms on a seasonal, that does not necessarily mean that it's an actual double bottom. That just means that there's a bottom here, and then there's a second bottom here. And this little horizontal thing, that could be consolidation. Could be. Could be. Is a potential. So we might see some additional seek and destroy out of NASDAQ just based off this seasonal information. We'll see. We'll see. We'll monitor it. So Nasdaq is actually the one that I'm least excited about. I don't want to touch it. Oh, let's check its open interest. Okay. Yeah, yeah. Nasdaq is because yeah. Let's do this order block. Right. So see that order block? See how we drove up into this order block and the open interest just skyrocketed, right? That's what I'm talking about. Now, obviously, we don't have the seasonal information for this open interest, but this future rising, it really does act as a confluence. It's not. If we did have that seasonal influence, it would be kind of much more powerful, but it is a very powerful confluence, just as that is right now. So Nasdaq, I'm actually looking for lower prices, maybe. maybe. No, no, I'm sorry. That's not what I mean. That's not what I mean at all. No, 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 no. That's not what I mean. So Nasdaq, I don't really expect it to run out this high anymore. So why? Because our open interest is doing all this crazy stuff, and basically what the market makers are going to do is they're going to start accumulating the short sellers buy stops. Well, no, 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 no. They'll start accumulating people's stops. Um, they'll start knocking people out of the marketplace and doing what they do. So that's what this open interest is telling us right now. It's telling us that this is really in progress. So another way to interpret this is if we imagine this is if we believe that this is a trending move, if we believe that this is a trending environment, which I believe that this is a consolidation environment and we're trying to turn around, the open interest rising is an indication that the trend will continue. So take what I said about it with a grain of salt because it can also mean that we're punching out the high and we're just going parabolic bullish. But if we're in a consolidation, like I suspect, and like I see in price right now, um, then no, no, we're going to be dropping. And where can we drop to? Well, let's see where's the stops. Conservatively, I'm sorry, conservatively, we have this order block right here. That's my conservative target. That's what I would imagine we could aim for. We could also aim for this fair value gap, just to be, just to be kind of rigorous about it. We could also aim for under here. Let's go ahead and project it out. This one to this one. No, down. All right. So we see we're hitting that order block right there. We can also punch out these lows. I'm not sure if we're gonna get this before December. So I'm not sure we're good. I am not sure if we're going to get this before or during September. Or September is past. Of course, we didn't get it during September. I am not sure that we are going to get this before or during December, but I am firmly convinced that we will eventually get this, and we'll probably get this one as well. So basically, be advised. I think that that's what's going on right now. So we go to do. Of course, that can't have, or that can wait until the very end of November because we'll look at the seasonal the last like 1 or 2 days of November. They like to print that high, right? That's very close to the holiday, and well, it's very close to the holiday, so I'm not really willing to be around the markets for that. But we can see the high print. Yeah, very end of November. We can also see it here, 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 really anywhere along here. This is a very good candidate as well. So just just stay. If we start going lower, stay flexible and stay picky about what you take and how you get out of the market. So yeah, all right. So yeah, no, those are the micros. These are my traded assets. This is where my equities trading is done in my futures. So we go into our bonds. Of course, we gotta look at our bonds. For our bonds, we have lows in the marketplace, and we're printing higher highs. Well, we're supposed to print higher highs, though. Very interesting. In the last, in the very last market review that I did for this week, in the very last market review that I did for last week, I pointed out that we kind of went into a seek and destroy profile for and let me get that voice crack out of my voice because that's pretty ridiculous to do right now. So I I pointed out that we went into a seek and destroy market profile for for the bonds. Now that shouldn't be right. That shouldn't be right. Seeing this low form in the marketplace, once this is here, and once we start moving away from it, that is kind of wrong. Um, Now the way seasonals work, it could be okay, um, but again, use your head, monitor this stuff, because that it just ain't quite right. It just ain't quite right to see seek and destroy. So in the 10 year, we can, because look at that. See, it kind of declines and it kind of consolidates, forms a bunch of different highs and lows, and until we rock it off near the very end of the week, near the very end of the week, near the very end of the month, right? Um, ZN might be holding this, the 10 year, right? So this 10 year, yeah, that checks out. Oh, that shouldn't be there. Let's say that because we're doing clean charts, clean charts, completely clean. Um, so the 5 year, more or less the same thing. The 5 year the 5 year has room to meander and do what it wants. So yeah, this is one that we kind of want to look at, but not focus on. You know what I mean? It can do quite a lot. We see that seek and destroy one more time. Remember last time? Wait, remember last time? No, don't worry about last time because that doesn't have a lot of bearing on what we're doing right now. But if we look at the Dixie, let us turn off what we had going on there. We can see that it just did a down week, and it just did down, right? So that's permissible. That's possible. As we outlined, we saw that it did a high, and it did a lower high where it should have done a higher high, and the um, the bonds backed it up with their own. They did not do a divergence between each other, but they diverged with the expectations in the Dow. So so yeah, we saw those divergences, and we saw that the Dow was going to experience some very heavy selling. Now we really expected it to come up a lot higher, or I expected it personally to come up a lot higher than it did, but it really didn't need to. It was under some very heavy distribution, as we can see on the daily chart, if we can find it. Yeah, this is October 4th. Through the month of October, we had a high and we had a higher high that we're supposed to have in November. We did not have that. And so, even though we're predisposed to drop down, we were already predisposed to drop down, just seasonally. So, yeah, this very dramatic thing under normal market conditions, this could be expected. This could be anticipated. This could even be traded in the equities of the U.S. dollar index. However, no, we don't want that. We did not want to see this. We were not expecting this. It wasn't it was not something that we were expecting. Right? It was not something that we were banking on. There is nothing good about seeing that. It's just yeah. But we did see a drop down according to that bearish pressure that we saw in the Dixie. So that's what happened. We had down days pretty much the whole time. just one seek and destroy, two seek and destroys, and did we have two seek and destroys? Yeah, we had two seek and destroys, kind of, sort of. This one wasn't seek and destroy. This was more like a drop and then a London close retrace. So no, I actually did call that in the market review for that day. I did call that the quintessential down day, which it kind of is. We formed a high in London, then we formed another high in New York Open, the pre-market, and then we dropped down, and then we reverse in London. Okay, and that's really what the quintessential down day in currencies. Now, fun fact. If you would like to trade this, because we saw the currencies behaving, but we didn't see anything else behaving itself. Um, what we can do, what we can do, is we can look at the forex, or we can even look at the euro. Now, if we go on the 1 hour in the euro, no, let's look at this on the 15 minute, because it was intraday, right? So looking at this on the uh, zoom in, open. Looking at this on the 15 minute, we see Dixie does a sweep, right? That's our Judas swing. Judas swing here, right? Then we pull up, and basically we have our London session here. It's all in accordance to what the Dixie was doing. Um, it followed it lockstep. It did it basically textbook ICT. It was very, very good. And here was our entry, of course. Was this our entry? Let's see. It's going to have to be 50%. No, if we follow the ICT rules, we're not getting entry. But we could also follow some modified ICT rules depending on our risk tolerance and our understanding of the market. We take more of a scalping type of approach, or we can accept the risk of getting into the market without well, we can accept some elevated risk. Um, let's just put it like that. So, seeing this, how would you trade this? Well, see this original um, consolidation type of thing? We imagine that this is our original consolidation, right? Then it comes down, it does this Judas swing, and then it comes up. So, when measuring a price swing in this way with this methodology, we ignore we actually ignore the Judas swing. We imagine that this price action is not there, because this is really the price action that price is operating on, because it comes from the original consolidation, right? It can come down here and give us our OTE, our 2022 model, our basically anything that we're supposed to be looking for. But it can also just come down to the original consolidation, which is basically this fair value gap gives us the entry, and we can also put one in the order block if we would so choose. And if we were going to use this methodology, our stop goes where? It goes under the consolidation. So using this methodology, we don't even expect to get halfway down this this um, this price swing. We really don't expect to end up here. So it's possible. We could just use this original consolidation and just buy it here. And this is actually an OTE all by itself. Let me show you. So let's add our OTE lines, 62% and 79%. And we see that it goes right in between the middle, right? Very, very cool. This is also an OTE. It's more of an alternate the main um, the main course that you'll be looking for. But yeah, that's an alternate using the short-term level and expecting it to be a bounce. And of course, we ran through obviously a very fast market, and I kept saying during that the equities and the I kept saying that the equities and the cryptocurrencies and all those things were supposed to have very fast markets. And the reason I said it was because ICSI was having very fast markets. This was what was supposed to happen, um, and this was what we expected. This was what we saw in the currencies was basically what everything was supposed to do, but it didn't do it. So too bad, so sad, basically. So that's how you would trade this. Um, oh, I almost completely forgot. So this, you would only expect this in a very fast market. Now, why wouldn't you expect this in a slower market than what we got? Which um, this is a very fast market. This is one of the fastest markets that you can possibly get, aside from what you saw in CPI with the just gapping and completely completely repricing, just picking up the market and placing it somewhere else. Um, this is the second fastest type of market. Um, well, at least the second fastest type of market that you should be worrying about. But when you're expecting that type of market, that's the only time that you want to be looking for OT in this way. Otherwise, you're going to be looking for it like this. And basically, you're going to be looking in this area for your fair value gap. You're going to find it. You're going to place your order right there. Or you're going to place that at the order block or wherever you're trying to place it. Alternatively, 2022 model, you could place it right there. Also, 2022 model, you see that there's a fair value gap. You see equilibrium, place it right there. Now, why would you do it this way, measuring from this very low to this very high, as opposed to that quote unquote fast market OTE that I was telling you about? In that case, that's because this is a very short-term order block. So short-term price structure, it usually just gets used once and creates a tradable bounce. So once you get your bounce, it's spent. It's done. That's usually a hard rule, more or less. So once you see it traded to, it bounces and is spent. In very fast markets, in these types of just parabolic moves, um, that bounce is going to create the major move. So you see how it tagged this order block? It just barely tagged the high of this order block. I could show you that with this. So you see how it just barely tagged the high of this order block, and then it bounced. That was enough. So the next dip into the fair value gap, it was off to the races. It was gone. That's really the only type of market where you want to be using this short-term structure, and the only time that you want to be relying on the short-term structure, especially on these lower time frames, because these lower time frames, that's where most of the liquidity hunting is going to be, because the levels on the chart are not going to be filled with candy for smart money to use. Just this internal liquidity is going to be very weak. They're not going to be that interested in it. They're just going to use it for developing the chart, not really building their positions. So smart money on these lower time frames, they're going to be more interested in things like this low. They're going to be more interested in things like this wick right here. Which, why would they be interested in that wick? Let me show you. Some traders, they like to trade like this. Some institutional traders, a lot of institutional traders for some reason, they like to trade like this. And when you see that the low is here, right? So they might want to break price here, and that might take people out of the trade. And yeah, they might be playing people that way. Let's go back to candles. There we go. Candles would prefer. I actually really like line charts because they'll show the line charts. They accentuate the highs and lows. Because look at that. Um, if you look at this, you can see the highs and lows in the marketplace very easily. You can see the lower highs and all that stuff, and the higher lows. Everything. Basically, the chart really starts to pop with the line chart. However, the candlestick chart, it tells you more about the upper and lower limits of where they're willing to bring price. So so they like to what's the word? On the candlestick charts, you'll see where they like to wick things and where they like to reach for liquidity and where they like to knock out traders. So so that's the thing. Usually wicks, they don't break the price structure. So you see these wicks all over the place, everything. Um, they don't count. They don't count for breaking price structure, even though this one, it punches through this low. If we look at the line chart, we can see that these higher lows were not violated. They didn't do very much. Um, so so we can see that even though we punched through, we still created higher lows. So that's the value of the line chart. You don't have to read it if you don't have the discipline to understand what the line chart is telling you. It's hard if it's hard for you to read, which I do understand that it actually is hard for me to read it. It just gives me that information. You don't need it. It's not necessary. It's not even particularly important. But just do know that a lot of institutional traders, they will trade with a line chart. So if we take that line chart, we can see where those people's orders are. And if we wick down beyond that, just know that they're getting put underwater if they put their stop at break even, or at the swing low. Basically, very aggressive equity management. That they can get wicked out very easily, and smart money, they know that they're going to do that to them all day, every day, and basically you're going to see it, and you're going to even see it not even break price structure, right? So you're going to see the wick through, and then if you look at it on the line chart, like say for example you're going out for lunch, and you're not watching the charts, you have your lunch, and then you come back, and you see that your position is off. That's because smart money tagged your position. However, they corrected the chart immediately, so that way when you look at the charts, you see and you think that nothing's wrong. So you have to go in and you have to look at your order history and you have to see that somebody took your order, and that would make you angry. That would make you not. It's basically insulting for people to have them lose their orders, to have their orders taken before without even breaking the structure that they're looking at. So it'll make them mad, it'll make them make mistakes, and it'll make them feed the smart money more. So yeah. Anyway, the takeaway is these short-term levels. We want to use them when we expect a very fast market, and we want to look lower than them when we don't expect that fast market, when we expect something more subdued, right? Let's see what else. So I did the euro, did the dollar. We have crude oil. Do we need to look at crude oil? I don't think we do. Basically, we're standing by on. I know I had the long in crude oil, the personal long. However, I cut that. I wasn't really interested in holding that after seeing how deeply it retraced, how far they were willing to pull it back. Kind of want to monitor it, and if we have a massive bull run, If we have a massive bull run, I'll consider going back into it, but for now, I'm flat on that and I'm watching. So, without further ado, let's take a look at our crypto. So, Bitcoin. This chart should not look like that. We should be dealing with a naked chart. Let's see if it saved in Solana. No, it did not. Let's see if it saved in Ethereum, which is actually Solana in this case. Let's see. I don't think it saved there. I just didn't mark this chart as we started going higher. Okay. All right, so let's go on the daily chart. Let's look on the daily chart. Let's go on to Bitcoin. So we're analyzing the seasonals of these right now. So these, I would love to see open interest on these, but we don't really ever measure that. And I'm pretty sure we have I'm pretty sure there is a version of open interest for coins. I see people playing with it every day and posting it every day, but I don't know. I don't like it. I'm not that interested in it. I am not that interested in it. What I am interested in is these seasonals. So basically, what we would expect out of crypto is from this point on, in November, cryptocurrencies, they will either run and do some insanely bullish thing, or they will do some insanely bearish thing. They don't really have an in between. If we see them diddling, that is a red flag of some sort. That means don't touch them. That means they can do anything. They could go up, they could go down, they could go sideways, they can knock the candy out of both sides of the markets and continue to basically do nothing. I don't know, man. I don't know, man. It should break bearish. No, 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 no. So based on our DD, it should break bullish. Um, if it does break bullish, as it did break bullish this last time, that kicked off alt season. If it does continue to break bullish, that will be very, very good for the continuation of alt season. So if you guys think that I'm not really talking about crypto, this is crypto. This is the heart and soul of it, right? So you really want to you really want to be paying attention to the seasonal of Bitcoin and the turns and everything of Bitcoin, because they will tell you when you're predisposed to go up and when you're predisposed to go down. Now, why is that very important? Because all the assets are different, right? If you get if you get a cryptocurrency, especially an altcoin, I won't say the other word because I'm trying to stay stay in the good graces while I'm in the basically while I'm trying to stay in the good graces while I'm on SEO probation. Um, seeing so altcoins, I know that they have their own catalysts and they do all their own movements and they do all that stuff. They're basically independent. But if you can have Bitcoin, especially moving up, moving higher, which we should have Bitcoin moving higher right now, then it is basically it's a loaded deal. That the altcoin pumps are going to be much easier. They're going to be much more powerful. They're going to be much more high probability. And really often, how many times have you seen a catalyst happen where nothing happens, or where it goes the wrong way? Or maybe you've been a part of a pump and dump that you didn't think it was a pump and dump. You thought it was just a pump, and you weren't expecting the dump, or at least not the dump so soon. Um, this is really gonna really help you if you have bullish Bitcoin behind your trade. Man, that's beautiful. That's very incredible. Um, but it's just it's so much more risky, so much lower probability to expect an altcoin to pump if Bitcoin's not doing anything. So basically, we want to see this pumping to put our finger on the pulse of the altcoin situation. So that's really what I'm doing with Bitcoin. I'm not messing with altcoins personally. Well, actually, I am on a personal level. I am messing with altcoins, but I'm not going to show you that. I'm not going to show you any of my trade ideas. It's mine. It's mine. I'm going to hold on to what I'm doing with the altcoins just because that's outside the scope of what I really want to be doing with this channel. So this channel, I want to get everyone used to thinking about big pictures and holding different choices in our heads, I guess. I really want to stay away from saying making choices based on the big picture because I'm not supposed to give financial advice, but holding big picture ideas in our heads. There we go. That's a little bit better. So now Ethereum. As we look at the seasonal, we can see that the seasonal says that it's okay. The problem is it has the same thing that's going on with Bitcoin. So we see that it comes down. It filled in this quote unquote liquidity void, this BISI, and it hit this order block. And so far now we're diddling just above the order block. I don't want to see that. Do you know why? The reason that I don't want to see that is because this particular bull market should be so fast. It should be so one-sided. It should grind higher so decisively that we shouldn't really see retraces like this, right? Even though this is permissible, even though this is an ICT idea, even though this is something that we should be watching for, I don't like it. I don't want to see that. I really, this is not something that's really gets me excited about what crypto is doing. So see this, we had the OTE. We should not have been able to get the OTE. Why? Because we should not have been able to break below this 50% line. Why? Because the market should have been going higher. It should have been going higher right now. It really shouldn't be that interested in retracing like we did. Now, in the crypto circles that I've been looking at, that I've been in, people have been talking about this as a retracement, and they've been talking about this as taking out the longs. I don't really buy it. I don't like it because we should be going higher a lot faster than we've been doing. And yeah, there's just nothing good about that. Let's see if there's a way to justify it. Because yeah, see, we still have this high right here. We should have at least punched through this high before we started retracing. Why? On the same grounds that we punched through this high. There should have been a low resistance liquidity run. This should have been a low resistance liquidity run. This is basically the definition of a low resistance liquidity run. Just pop, pop, pop while we're predisposed to be bullish, and consolidation waits until we're above here. we obviously didn't do that, so yeah, I'm not sure. I would be very suspicious about anything that that crypto does until it comes up here and resumes its bull run. I don't really believe in lower prices. Let me analyze the structure real quick because I haven't really looked at it to the downside. Pop, 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 pop. So if we come down here, I would be very suspicious of seeing higher prices. It may chop, but based on the seasonals, man, if it comes down here, I expect it to drop through the floor. So that's not something that's strong enough that I would commit to it. But it's something that it looks like it's in the cards, you know. So be advised of that. If we look at Solana. Solana is the one that we didn't have the seasonals. We can still kind of analyze the highs and lows. Eh. Just like last time, nothing too exciting. Nothing, nothing. It's just sideways. So, what was I about to say? This should probably be the fastest market because it's closest to the altcoins. Um, alt season is for altcoins, so yeah, because this thing is closest to the altcoins, it should have the fastest bullish market. It in reality it did because we saw this bullishness for Tuesday and Wednesday, but then it kind of rejected. It kind of decided that it wanted to hang around and just do some diddling after that, which interesting decision. I'm not sure if I like it. So yeah, basically hold off on crypto. Um, don't worry about crypto. Don't think about crypto. Don't do anything about crypto. Um, if you really like the idea of trading something, if you can't control yourself, there's always ETFs. There's always futures, the prop firms and futures. If you know ICT, if you know the PD arrays, and you know how to read them, which on this channel we're basically going over how to read the PD arrays without. This is about 90% how to read the PD arrays and about hmm. This is about 90% how to come to the conclusions that let you read the PD arrays, and it's about 10% the PD arrays themselves. So that's that's what we're doing here. Um, if you know those, if you know how to come to the conclusions based on the PD arrays, then prop firms should be no problem for you, because they're basically how to frame risk in like 4 to 1, 5 to 1, 6 to 1, 3 to 1, 2 to 1 is still very good. Um, but realistically, you should get 4, 5, 6, even 10 to 1. I've done 15 to 1 sometimes. Average is about 3.5, 4 to 1, with a lot of 2 to 1 and a lot of 5 to 1. So yeah, PD arrays, they're really good if you're dialed in. But basically, don't touch these. Look at other asset classes. Keep your equity close to your chest. Don't give it up readily. Um, take your shots very carefully. This is not financial advice. These are ideas that maybe you want to think about if you're engaging in these things. These are ideas that I personally think about, which I feel very strongly about, but once again, they're not advice. Um, where was it going with this? Nowhere, right? So let's see. We went through the equities. We went through the crypto. We went through the bonds with the. I'm sorry. Let me get that voice crack out of my voice. We went through the equities. We went through the crypto. We went through the bonds. What do we have left? I do believe that we have the commodities. So let's take a look at gold specifically. We'll go in currencies because I have it classed as a currency. Really, it's a commodity, but they have very similar ideas here. We can see that in November, it's a crapshoot. It kind of declines. But this is another one of those where it either goes up or it goes down during November. So because we're seeing some bullish pressure in this, or actually we identified bullish pressure in gold, and we identified bullish pressure in the commodities, right, as a class. So what we want to see is we want to see this drop down, basically right here during October, and we want to see it shoot off. So from here, this should be a very fast market. Remember what I said about the short-term levels. Even though this is a daily chart, that same principle that I showed you on the 15-minute chart, that applies here, right? Original consolidation, sweep the lows, come up, and then where do we start to look for support, right? We start looking here, and we start looking here at the order block. So it came down, it kissed the order block, just one little tick. I guarantee you this is one tick. What's the high of this? 1932.365. What's the low of this? 1940. No, that's the high. 1931.685. So it's practically a kiss. It ran it through just a little bit and then it ran off. So short-term levels and fast markets, right? That's what we're expecting out of this. We're expecting this to just run. This is the only one. If we look on the 1 hour chart, this is really the only one. This one and the Dixie, which printed the trends that we were expecting, that we were hoping for. The Dixie we were not expecting trend actually. The Dixie we were expecting to be more or less held, just because of world events. Gold could shoot off though. Gold could do what it wants, but the Dixie we actually expected to be held. So on gold, let me actually put this on the chart. We can see that we came down this week. This week. We did more or less a parabolic up week. This last week, we did a Judas swing for the month. Okay, so this is our monthly open. We did the Judas swing, and we shot off for this week. So yeah, just keep in mind that's another confluence that we're going higher. Where are we going? Higher, much higher. We could fib it. Let's do it. Come on. Maybe the 4 hours a little bit easier, bro. So we can fib this really quick. Conservative target, 2076. And we can go on the daily to get a better target. Is that the one? Not quite. This one, maybe? Get there. Or we can do 2100 or so. So, yeah, 2076 would pop out that high. And that could be what we're aiming for. Let's see what else on the gold. We could do an open interest study, but as I said in the last one, gold contracts are fake. So the activity that happens in the open interest is not going to be reliable. Here, crude oil. So this should be a clean chart. That actually betrays my opinion on crude oil right now, but it should definitely be a clean chart. So we have November. Usually it likes to, it shows that it likes to charge down. I'm not sure if I believe that right now. That may just be because all the data that we have is basically a bear market in November. So it's by November. To do the weekly, and we can see previous data. Uh, yeah, November during bear markets, it likes to fall out of bed. It likes to fall out of bed here too. This was a flash crash. See, we have examples of a healthy bull market. So this is not a good example. It's here somewhere. Stop. Huh. All right. So I could have sworn that this was one of those ones that decided its trend based on different things. Basically, what we're looking at is we're looking at a November decline. This can be either a hard decline or this can be a choppy decline with a lot of bullish pressure in it. That's what I expect to happen, but we can see that it kissed the order blocks, and it's kind of doing what it wants. So my expectation for the rest of the month is that it's just going to kind of meander around, and then come December, it's going to decide what it wants to do, and what it wants to do is go higher. So that's my expectation for it. November downward seasonals with chop. That's basically my prognostication. Excuse me. All right. So next we're gonna look at the contract marks for the commodity futures. I'm gonna point out one more time that the metals are fake, and that we're gonna put the PD arrays on the monthly, the weekly, and the daily charts, and maybe the 4 hour. We'll do the 4 hour as well, and then we're gonna wrap things up with the economic calendar and close out. So, to barchart.com. Go into our futures. We're going to check out our energies. And I assure you, dear sir, this is absolutely this is absolutely crucial to equity trading. By the way, this is knowing what's going on is crucial to equities trading. So we'll look at crude oil. We see a little bit of a change. So this looks kind of like the that looks kind of like the premium market is breaking, right? Well, that's not quite true. So what's going on here is we're seeing a little bit of a shift in market sentiment. Hmm. How should I put this? Because it's a type of manipulation, but I might actually be able to get in trouble to. I might actually get into trouble explaining how that works. But basically, know that when you start seeing this shift, um, that's a heads up to start paying attention because these premium markets, they're very long term indications that there's bullish pressure in the marketplace, and once you see these start to kind of shift and start to kind of change start to kind of change their dynamic, um, it is it is an indication of things that you should be aware of. It's an indication that things might start be shifting in the marketplace, that they might start be coming to a head. So yeah, so basically just take these in. Note the differences from last time. And I want you watching my videos, so yeah, I will be um, referencing the last time without talking about it completely. See that? Notice anything different? Hint, hint, nudge, nudge. So these are premium markets. When I'll show you in the metals, because the metals can't do a premium market. This is a carrying charge market. This is a normal market. This is normally how they are. What we just saw were premium markets, where the numbers are flipped. See? See how the numbers are flipped? As opposed to the carrying charge market? Get out of here. Nobody wants your stuff. See that? We'll look at the grains for your information. See that coming to a head? All right, so we're actually going to start looking at these charts. I was not interested in corn. I was not particularly interested in what soy was doing, but might want to look at corn. Mm, soybean oil. Wheat. Remember what I said about wheat last time? Just for the clickbait. Of rice. Okay. And canola. Was rice like this? We're gonna investigate rice to see if it was like this. That was January and March, right? Wow. Oh wow. Okay, rice righted itself. So we want to be watching rice. So far corn and rice. Let me write that down. Yeah. Where's my pencil? I want a pencil. I don't want a pen. I have a million pens, but now that I need a pencil, I don't have any. All right. So corn. And we also want to look at, so that's ZC. Okay. And we also want to be looking at rough rice, ZR. Some of my favorite things, actually. I love Cocoa Puffs. I love my corn. Anyway, we're gonna move on to our livestock. We're gonna take a look at that. It's fine. Still looks fine. Lean hogs, surprisingly fine. Again, this is still surprising because these are some of the most control. They the meats are advertised. I guess I should put it as some of the most controlled assets of this type that we're looking at. They're the most controlled agricultural assets. So seeing that they're not limited in certain ways, that's very interesting. Class 3 milk. Remember what we said? Let me look at milk. I'm pretty sure we looked at it last time. DL. Okay. So it's a November contract and a December contract. So we're gonna look at milk. If I can spell it. It's gonna be what, DR or DL? DL. Delta Lima. Okay. Oh, excuse me. We're also looking at the non-fat dry milk. Okay, that one looks fine. Am I stroking out? No, we don't care yet about the class 3 milk. So let's take that one off. No DL, no milk. We don't care about that so much. That will not help our equities trading at all. No, that won't help us stock anything in commodities. So just seeing a premium market by itself doesn't really do a whole lot for revealing a commercial bull market. But right before watching a commercial bull market kick off, you're usually going to see it come to a head, and that's what we're looking at in the energies and things like that. So when it does come to a head, it doesn't normally just kick off like that, like nothing, but it does. It usually puts a halt to things. It usually slows things down. It usually puts a cap, a limitation on price, and then it rolls over. So it's a little bit of a long-term thing. It's an intermediate term idea, but that really helps us stock a long or a short. So let's take a look at butter. No, that helps us stock a long. That does not help us stock a short. I'm sorry. 290, 50, 40. Okay. Butter might be one. So let's take a look at that. BD, Bravo Delta. Bravo Delta. There we go. And cheese. So we might be done a little bit faster than last time. Man, I can't even see that. Cheese, definitely. Okay. Bravo Juliet. And I don't trade these very often, so I don't have the contract names memorized. All right, let us reload TradingView. Give me 1 second. Let me reload this. Yep. because I think it timed out somehow. So yep, connect. Always be connected to our paper trading account while we are live. That's how we will. That's how I will hold myself accountable, and hopefully be trusted. Is by always staying live as long as always staying connected to that paper trading account while I'm live. Obviously, you don't see the counter at the bottom. That's because I don't want to show the account name, but you you will be seeing that on Twitch, and you will see that at the beginning. You will see that the ending amount of each stream will match, or the ending amount on the VOD of each stream will match the beginning amount of the very next stream. So so it's continuous. It's never topped off. It's never reloaded. It's never reset. It's just there. Whatever total we have, $3,058.03. That's what we're rolling with. That's what we continue with. So yeah. Anyway, what were we doing? We were looking at ZC. Car and futures, right? Looking at the car, you know. We want to look at this on a weekly, probably. Come on. Let's go on a monthly. So, all right. So corn looks a little bit mushy right now. Could come down here. I don't want to go. I actually do not want to go below a monthly when appraising what corn is doing right now. So what I will do is I'll put the levels on the charts, and I will put this order block on the chart with its wick. I'll actually leave the opacity there. Just because we're not trading this. Just because I would not. No, we are not trading this together. No, we are absolutely not trading this together. I'm not a financial advisor. I cannot tell you how to take a trade. But I would not be trading this without the monthly chart on any chart lower. And the whole reason is because looking at this, would you, seeing how mushy these wicks are, yeah, well, seeing how mushy this chart is, would you touch this on a lower time frame? Would you really do that? I would not. So yeah, when stocking this long, I would start with a monthly chart. I would not go much lower than that. So yeah, that's what we're doing. What was the next one? ZR. Should see more or less the same thing. Interesting. Very, very interesting. We may have missed the boat, or we may have missed the boat on ZR. Should we mark this one? Let's mark this one. Right. That will be our order block. What was left? BD, butter, BD. Interesting. 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 Agricultural. BJ. Hmm. Okay, all right. Well, I guess we go to our softs because our softs is what we missed. We didn't look at our softs yet, so we'll go ahead and do that. Da, 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 da. And remember, we have this. We're going to be putting a PDs on our charts immediately after this, and then after that, we're going to look at our economic calendar for the week and be done with it. Okay. So we're very close. We're almost done. So there's cotton. There's coffee. There's coffee. So far, coffee is not rolling over. It's not doing it. Sugar. Sugar. If I remember, sugar number 16 might have been the one. So I think it was sugar number 16 that was showing the willingness to roll over. Coca. Coca. We're going to look at cocoa. So that's CC. Charlie. Okay. We have lumber. No, we're not looking at lumber. Are we? We should, because we have a lumber shortage. But it seems like nobody cares. All right, so I guess not lumber. We're gonna take a look at it. Should we take a look at this? Should we take a look at some orange juice? Nah, I don't think it matters. 44.01. Yeah, sugar number 16. So sugar. So what is sugar number 16? Let me take a look. Got our sugar number 11. Sugar number Friday. Let's see. 50 long tons. So sugar number 16 is it's sugar number 16. So I have no idea. I have no idea if it's processed or whatever, if it's brown sugar or whatever. Sugar number 11 appears to be world sugar, whatever that is. I don't know. So sugar is SD, Sierra Delta, if I could write that down properly. And we're gonna cross off cheese and butter because apparently we can't see those futures contracts. Are we good? Do we have everything? Every time I look at this, I feel like I'm missing something. So what's doing that? So just looking at that. Where are you? Fox Hotel Kilo November Uniform X-ray. Fox Hotel November Kilo November Uniform X-ray. Thinking. I'm thinking. Let's look at the cash market really quick. Just looking at this, you could probably tell that you need a different mentality to be in sugar. So just be advised. Just be advised. Charlie Charlie, the cocoa. Let's take a look. Wow. Wow. I don't even have a way to mark that up. Um, just wow. That is breathtaking. So we probably want to, man, probably the weekly isn't even going to be potent enough. Um, this is probably such a potent bull market. This is probably such a potent bull market that we're probably not even going to be able to get down here. So and I guess we mark the weekly accordingly and forget about it because it's not coming here. Where are we? It's going to be 5%. This order block on the weekly is going to be 5%. And it's not even coming down here, so it doesn't matter if it's right. The daily, it could probably come back onto it. It could probably come back inside this bolt. It can probably come back inside this order block, probably the upper half of it, maybe into here. So we're going to go ahead and mark this out. It's going to be purple because that's the color for these gaps. 15%. Order block is going to be 15%. And in fact, I'm not even going to mark the whole thing. Let me show you. Something that ICT used to do really back in the day is he would mark the order blocks like this. He would fib the order block. He would take the halfway, the mean threshold, and he would just mark them like this. That's the type of order block I expect to hold in the cocoa. I guess we'll be no, not this one. We're going to create one of these, and we're going to add all of the ones of these. Create a new list, agriculture. Save that list, brand new list, and we're going to add CC. We're going to add ZC. And we're going to add ZR. And hopefully we're going to add SD. I would like to follow SD. Not SF. It doesn't have it. That's all right. We have enough. In the cocoa, and in the corn, and then the rice, we have plenty. So so yeah, basically we're gonna be monitoring these ones. Quotes are delayed by 10 minutes, like it matters. It's cocoa futures. Man. So in these, let me show you why that doesn't even matter. This is 4, 6, 7, 8, 9, 12. So see, when the day takes over, that's 4 in the morning, and the previous day is 1300. So this runs on RTH, but it's a little bit of a modified RTH. Starts at like 4 or 5 in the morning. That's when these usually run. That's a holdover from way back in the day. What's the word? In like cattle trading, people, they would show up at like 5 in the morning, and they'd hang out on the ranch, and they'd appraise the cattle, and they do all the. Basically, it's a farm timeline. It's not a market timeline. So if you look at like equities, and well, basically equities, basically just equities. You'll notice they open at like 9:30 in the morning. These open at 4 and 5 in the morning. That's because they run on a farm clock. So where 20. So you see 4 in the morning, this thing starts running. And then 1300 they square. 4 in the morning, this thing starts running. Boom, just like that. You see that Judas swing? 5 in the morning. That's because it's running on that farm time. Mm-hmm. Yeah, and you can see that if you study the agricultural futures. Um, very, very interesting. Very, very, very interesting behavior for the most part, for most people's study. Um, 9:30, 10. Okay. I know. I'm just studying the price action really quick. It's not that important. Um, it's just important for like planning and things and planning how to get into a position for. That's what you want to understand these intraday um, profiles for in these agricultural futures. They move on a grand scale. They don't really do a lot of intraday stuff. Um, it's not really good to scalp them. It's not really good to take day trades in them. It's not even very good to take weekly trades in them, like those short-term trades in them. You want to take these intermediate term or long term. They're not they're not liquid enough for anything. So if you'll notice the rice, it actually uses the regular RTH. The reason for this is because rice is not native to rice is not native to America, and they didn't do it back in the days of cattle runs and all that stuff. Um, they didn't really grow rice on farms. Nowadays they kind of do. They can grow rice anywhere, but well, some places they can grow rice more easily than other places, obviously, but they can grow rice anywhere, and there are farmers all over the world who grow rice. But back in the day, um, back in the day when these futures were the most important, um, they um, when they had the agricultural market and the agricultural trading and stuff when that first started cropping up, this was it was 5 in the morning. We ran on the farms time because the agriculture ran based on farms. Right? So if you bothered the farmer at a time that the farmer didn't want to be bothered, um, or if you wasted the farmer's time, you weren't getting the goods. It didn't matter how rich you were, how much you were willing to pay, what was going on. He would tell you to come back in the morning and work on his time and do all of your accounting, do everything um, throughout the day from 5 in the morning. So that's why they started at 5 in the morning, um, and that's also why. And this starts at RTH because rice was not one of those things that they traded. So even though it's agricultural, 9 in the morning for rice. That that's what's special about it. So I do believe that was a bit of a tangent. I did promise that we would do. Here we go. Here we go. Let's do this. I'll tap. Okay. So we're gonna go ahead and mark this chart up, and you'll go ahead and you can be on your way. So let's start on the monthly. We don't go lower than the month. We don't go higher than the monthly. I made that same mistake earlier, but we don't go higher than the monthly because we're just not interested in going higher than the monthly. So Go ahead and do this 5%. We're gonna see if we can refine on the weekly. If it makes it better, if it makes it worse, it looks like it's just gonna make it worse. So we're not gonna touch the weekly. Looks good. Where are we planning on catching it? On the downside? Are we planning on catching price on the downside? We could catch it maybe. I don't know. Let's fit this. Let's take the OTE off there. So that's a little bit hard to look at. We could catch here. Let's do that blue. I don't think that that's worth refining any lower. So obviously we can refine lower. We can go on the daily chart. We can pick apart these highs. We can say, hey, we're gunning for these highs. Honestly, I do think that we can hit these highs. So I'll put them on the chart. Here. There we go. We can either stop here or... No, if we take these highs, we're taking this one as well. Huh. Yeah, it's a tough one. We're also inside this monthly wick. So remember what ICT said in his last video. If we're inside a monthly wick, if we're inside a wick, that's like chumming the waters. That's like inviting all this gross price action that we see here, right? But we're seeing the gross price action here as well. We're not supposed to, like I said, so that's why I'm on alert. That's why I'm not trading it with my own money, and I'm not even trading it on my demonstration demo with a whole lot of conviction. Keeping that equity very close to the heart, keeping it away from the marketplace. I don't know, man. I don't know. We can mark this, possibly. This is also a possibility. No, not a vertical one, a horizontal one. There we go. If we go below that, where do I expect price to go? Probably here. Inside this order block, this is the wick. Should I mark that wick high? Well, I should mark this order block at the very least. Mark this one with yellow. Yeah. Do you think it's worth refining down further than that? Maybe. Maybe. Well, I have no viewers, so doesn't really matter that much. We will look at this. So this is really my guess. I guess we'll make this one yellow, just to differentiate it, so we know this is a downside target. This is an internal target, but these are all very important targets to the upside as well. Excuse me. expectation, although I do expect this wick to maybe accept price. Um, However, that expectation was more or less blown away. Um, it was kind of lost, right? So I'm not gonna mark this. Oh, so I'm not gonna mark this order block because we're already mostly through it. So let's go on the weekly, try to refine. Yep, we can absolutely refine this. Do a yellow because that's an order block. We did break this high. Yep, and we were actually bouncing around this high. We were using it as kind of an equilibrium level. Okay. Where can we come down to? Basically the same place. Man, I really don't expect it to get all the way down here, but it actually can. It would actually have no problems doing that. Let's go on the weekly. Take a look at this. Take our premium and discount. We should not be coming down here. There's no reason for us to come down there. It's on the daily. But we can come down here. This is actually possible. This is more likely. This is much more likely. So for now, for right this second, here's what I'm gonna do. We will mark this here. This is gonna be our target. Okay. And this right here, it's gonna be our order block. It can come down here, and it can come down here. I don't want to see it passing here, but it can absolutely come down here. So, so yeah, that's what I'm interested in seeing. Does this work? Is this working? It says it's working. Here we back. Hello? That's something that's permissible. What else could it do? It could do this. It can do this. Basically the same as all the other equities. Put a line there, and it could also do this. I apologize. It could also do this. Interestingly enough, it has an extra feature that could be used to further refine what's going on and further get further ideas on what to expect out of price action. So it's got the volume imbalance right there, and yeah. Other than that, hello, hello. Is the stream working? Probably not, huh? It says stream health is excellent, but I don't believe it, based on what's been going on with it. So Dow, why are we on the 4 hour? Should be on the daily. Okay. Yeah, Dow looks like we can come down into here and perhaps shoot off from there. But mostly with Dow, especially, I kind of want to see either take this high, or I want to see it just kind of diddle. This is the one I want to see held, just because it's so advanced. It's so far along from what it's doing. So so yeah, that's my markup with the Dow. Let's see, what else do we have? Bonds, right? Bonds. That includes the dollar, right? So this equities trading of the dollar. Yes. All right, so let's take a look at our monthly. We have our fair value gap. We just kicked off of it. Just like that. They're coming for me. 5%. Let's go on the weekly. Take a look. Not really a whole lot. Order blocks, 2 of them. Not sure if they're worth marking. Maybe this. Maybe this right here. Yeah, the fair value gap, or this fair value gap, that was kind of interesting for last week, but I'm not sure about this week. Not so sure anymore. Don't really see a lot that I care about so much anymore. Targets, possibly. And targets. Okay. So the targets are really all that I care about on the chart, and the reason is because this chart is going to be so fast. This chart will move so fast that we're not going to see a whole lot. So we want to mark our 4-hour features, I guess. Let's see. Do we have a breaker? We do kind of sort of have a breaker. So we're going to mark one. Maybe. That's going to be red. And ooh, that's a weird feeling. Excuse me. Oh, that's kind of weird. Okay, so when looking at this chart, because we have that high-low liquidity run here, and how do I know this is liquidity run? Let us take that fair value gap. We're going to take that off the charts. So it's not even going to matter to us. See how it just pokes up into it? That's a liquidity run. Okay. They might be mitigating that. They might be doing whatever they want. I don't know what they're doing. Whatever it is, they're producing a very, very fast market. So what was I saying? I lost my train of thought. So we're gonna go ahead and mark this order block. This one in particular because it was the one. So it was the one that produced this movement. If we can do that. And should we do anything else? Does anything else matter here? Fair value gap. This one matters. Yeah. So because we are in such a fast market, that fair value gap might be important. This might stop price. Let's make it visible. Save that. Looks good, looks fine. And this one's especially important because it's above the weekly open. However, we are just going to have a new weekly open right here. So all of this is going to be above that. So yeah, if we dig up above that weekly open, we're not nearly as bearish as the chart looks. So yeah, we might actually want to look at it we might actually want to look at that as a disqualifier. Here we're going to look at the daily. Do we like anything on the daily? Weekly? Okay, so bonds, I think I'm just going to let these go free. Yeah, bonds, I'm just going to let go free. I'm not even going to worry about the kinds of opinions that they put into the marketplace. And the reason is because if we look on the daily, we see that they chopped. Now, for these two, that's more or less okay, according to the seasons. So we'll give these two a pass. However, this one, uh, I'm not sure if I like it doing that without order block. You know what? You know what? We'll put this on the chart, and I'll tell you the reason. The reason that we're putting this on the charts is not because I think that this is an objective. I believe that if we get past this order block, then we're going to be doing that bullish movement that we're supposed to be doing right now. So basically, this order block is on the charts just to monitor. So that order block we're gonna use to monitor price. We're only gonna put that on that one because it looks like is there one on the weekly? And that one is just impractical. Right, so the methodology that I'm using for the bonds is I'm not really calling levels, but I am putting levels on the charts in order to sort of measure and monitor what they're doing. So the particular levels that I'm interested here, the particular levels that I'm interested in here, like and I really think that there's only one that has levels like this, and that's the ZB. That's the 30-year. That's the ball and chain. The ones that I'm interested in are sort of going to give me an idea. Kind of like when I took that Nasdaq trade. Um, they will help me figure out what's going on with this market, right? So just like when I took that Nasdaq trade, when I saw that order block that was validated, I'm seeing this order block, and I want to see us melt up through this. And if it melts up through this, that's a very bullish sign. That will tell me that the bull run is more or less on, or it may be on, or it's likely to be on. So so yeah, that's just one of those bullish things that I want to look out for. As far as lower limits go, I'm not really excited to see this pass this consolidation at all. So I really don't want to see a Judas swing violate the 1-day chart. Is there anything the 4-hour can do? I'm not particularly excited to see any Judas swings violate these. Let me see. Let me go on the daily and check it out. Maybe this one? Yeah, maybe we could have a Judas swing under that. Other than that, I'm not too excited about seeing a lot of price action in the bonds right now. So, yeah. Did we do the crypto? No, we did not do the crypto. Okay, so The crypto, something very important to note. We're still looking for evidence of a very fast. Now in this case, I'm not so interested in speed as far as time is concerned. I'm more interested in speed as far as the price action itself is concerned. So, like for example, I want to see this. I want to be able to view this as a time dilation. So, let's go on the 4 hour and see if there's any springboards that we can look at. Not too excited to see it come down here and knock all these out. Although it can. Like, look at that. It's set up to do that. We can reuse this order block. Because remember what ICT said. ICT said that you can reuse an order block twice on the daily. And then once it's reused an order, once it has reused an order block about twice, then the guidance. Now this isn't a hard rule. That this isn't necessarily what will always happen. It can act as a barrier forever. Um, but the idea is that maybe our investment priorities change, and they want to run through the order block if we reach it more than twice. But if we have a high time frame order block and we hit it once, we can hit it twice, no problem, and it's still good. So that's what I'm counting on. That's what I'm interested in. But it's a shot in the dark. So we're going to put this back on the chart. 5%. There we go. As far as the upside goes, unlimited. 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 We're going to use that same order block. Again, like ICT said, this is a way that this can set up. But like I said, I'm not too excited about that type of market. That sets that up, especially at this time. Should we do this? Should we use this? Should we be using this order block? Maybe. Let's do the 4 hour. Because we're going to take liquidity on the 4 hour, right? So it's going to go boom. At least it's going to take this, right? It might take this. Could take this. So we can do this. We can use this one. Yeah, we'll use this one. This one's fine. Let's go on the daily. Make sure. Oof. Oof. Man, that's crossing the line there. Let's go on the daily. Yeah, that's fine. We can use this one. So I'll use this one as an expectation. Once again, I want to see this as time dilation. I don't want I don't want us giving up a ton of ground, especially in crypto. Especially in crypto. Now, that's probably a false hope type of thing. Um, we have probably lost it. We probably have a bad alt season coming up, but I want to see it run personally. So So my personal opinion is that I think that we still are going to run. However, um, we should not see any of this ground. Okay, so my personal opinion is that we are going to run. However, we shouldn't see any of this ground given up. So yeah, it's already trying to give up ground. Ethereum already tried to give up ground and succeeded, but I'm a degenerate, so I don't want to see it give up ground. I want to say that it's not going to give up ground. So that's what I'm going to say. Um, until it drops under here, um, it has not given up ground. I don't want it to give up ground. so so yeah, no, we don't care about that. Am I missing anything? So let's see. We did the indices. We did the bonds. We did the crypto. We didn't do the bonds. We didn't really mark up the bonds, and the reason that we didn't is because it's man, the bonds are in such a tough spot right now that I don't want to touch them. I don't even want to mark them. But we did do the currencies. So let's see. Do we have anything else? Probably not, right? Probably not. So in conclusion, the macro scale, it did not change. It's still um, bonds should be dragging everything down. Um, commodities should be moving up, macro scale. Um, oh, gold, gold. I missed gold. I missed gold. I missed gold. Okay, so let's do gold. Did I miss gold? We'll see soon enough. Currencies, gold. Okay, go on the weekly chart. Want to see? We want to see that we're springboarding off gold. There we go. This one, that one right there. That one's the one. That one is money right there. That's the one. That's it. That's it. That's it. Okay. Then from here, order block. Right. This order block right here, this should not give up the. This should not give up the ghost. This one right here. If this gives up the ghost, this is our maximum. Okay, we are not coming beyond this. We should dig down into this order block, maybe, if we really want to rebalance, and come down to here at the most. But our maximum limit is here, inside this fair value gap. Right? It can recapitalize here, but realistically, you should not be doing that. Targets, 2050-ish, right? Because remember, we came up with that, right? It's on the weekly. Yeah, 2050. I think it was like 2059 was the target that we came up with. Let's see. Fit. There we go. That's a 2080. 2040. Where's the 2050? 2100. We're targeting this for now. Okay. Now, because of the pattern and because of the way that this bull market should work, it should blow out this high, and it should actually go up to 2100 ish. But yeah, considering the world events and what's going on, I wouldn't bet on it. So yeah, on the weekly chart, we have this anchored here, and we also have this order block. That order block is going to hold it, and yeah, that's my summary of gold. So that was about it, right? That's about it. So basically, in conclusion, The macro scale has not changed. Um, bonds dragging everything down and pushing commodities up. On the intermediate scale, I am seeing some changes. I am seeing some rumblings of most things shifting bearish. The dollar index shifted bearish. I don't know why. Um, I'm sorry. I do believe that I know why. That fundamental thing was a little bit too much for it, and it started kicking off. Started popping off. Started doing its thing. That makes it that makes a very complicated, a very challenging situation, a very challenging environment to be a trader in anything other than currencies. And the reason is because the dollar is moving down while everything else is shifting bearish. Okay, I'm seeing a lot of bearish shifting. So for that reason, we are monitoring every single other asset class, and we are looking to see. We are looking to see if they want to be bullish or they want to be bearish until we find conclusive evidence of bearishness or bullishness in the developments of the other asset classes and in the development of the stock indices and in the development of the bonds. We have no opinion, and we're keeping our equity very close to our chest. We're not just shooting it off willy nilly. We're being very intelligent. We're being very surgical with it. We're not just throwing it away. Okay. We're not doing any full pulls. We're not doing anything crazy like that. And what else? What else? What else? What else? Let's see. No full pulls. No nothing crazy. Corn, rice, cocoa. Yes, that's it. That's the last part of the summary. So in the agricultural, in the agriculture and in some of the energies, we identify some commercial bull markets which are predisposed to kick off just because they're rolling over. Their premium markets are rolling over. They're doing some rumblings that something is about to happen. So so we're looking at corn, rice, and cocoa for very bullish, very extremely bullish tendencies in the intermediate and in the long terms. So basically, we're standing by on the bull markets on those. We saw that cocoa, the one that's on the screen, is already kind of engaging in those activities. The rest, we're not really doing it that much. Well, I mean, rice. Rice looks like it's in a bull market. That can be seen as being in a bull market, where this is where the buy is supposed to be. But let's see if we can fit this. We could see it come back here, I guess, maybe. Less and less and less. Unless it's moving a ton. Which, man, if it moved like that, we can see a buy come in right there. That's historically possible. And in fact, that's realistic. So we can see that. We can definitely see that. So we want to be monitoring in rise. In rise. There we go. We want to be monitoring right about there. When it reaches that line, just going to be a yellow line because it's a target. It's not liquidity, it's just a target. We want to be monitoring that um, to see maybe a setup form. And we want to be studying that setup, not with financial advice. And we want to be very interested in it. So that should be just about everything. So I guess the summary was the top down and everything. Blah, blah, blah. Did we go over the economic calendar? No. Let's go over the economic calendar. Close these off. Okay. For next week, we have an FOMC. So it's not like a real FOMC, but it's an FOMC meeting. Usually those are enough to cause a stir in the marketplace. Just looking at this economic calendar, you can see that there's not a lot of speed. You can see that there's a lot of high impact news. However, not a lot of it is going to be a speed bump in the marketplace. So markets like these, they kind of like to what's the word? See, flash manufacturing, that's all right. So these can do one of two things. They can either really rip or they cannot. They don't do a lot of give and take. If we start to see a lot of give and take, that means that we're not in we're not in a very good environment. So yeah, through this market, we shouldn't see a lot of give and take. And yeah, I'm thinking about other currencies when I'm looking at this, but they really don't matter that much. So you can see when the pound, this is also going to affect the euro. I'm sorry. You can see when the pound is going to do things. That's also going to affect the euro. If you're a currency trader, if you're interested in what the currencies are going to do, these are going to be very important for you. I probably should pick up an interest in the currencies just because they're the market that's moving. But I don't know. We should see. This should be a very telling market this coming week, but it's also going into a holidays. What's this? Huh. Yeah. So that's also going into a holiday. So that might be why we're seeing the market cool off, and we might actually see the market cool off even more through all this. Um, Either the news is going to give it momentum, or it's not. So that's basically what we're looking at. So yeah, we're either kicking off or we're getting stuck. Did I forget anything? So yeah, basically throughout this week, just kind of, if you can, if you're willing to, just sit on your hands, because engaging in this type of environment is it's usually not worth it. It takes a lot of skill and it doesn't give a lot of returns. So yeah, just sit on your hands. As for me, I don't think I'm going to be able to do that. I think I'm going to be chugging away. touching this market, maybe when I shouldn't. Hopefully, hopefully, I'll be able to identify the conditions that I shouldn't be able to touch. But yeah. Anyway, stay safe out there. Don't touch it. Do not touch this market if you can help it. If you can't help it, be very, very careful. Until the market proves that it wants to run, don't demand that it does. So, thank you for your time.